since morning it was down 4%, and right now as well we are seeing the stock is lower by 3% after what was an operationally weak first quarter. First quarter is usually seasonally weak as well. Interest income missed street expectations while asset quality is also under some pressure. Let's get in the Managing Director and CEO of Federal Bank, Mr. Shyam Srinivasan. He is here with us to discuss the earnings fine print as well. Mr. Srinivasan, good afternoon. Thank you so much for joining us here today on CNBC-TV18. Well, before I speak to you about your numbers, can you give us a sense of when you're planning to launch your QIP? Because that has been in talks for a while. Quantum of fundraise that you're looking at as well. And how much will that improve your capitalization?
Sonal, you made many assumptions. Firstly, I want to make a statement. I heard you say seasonally slow quarter, but weak performance. I'm sorry, I don't think it's a weak performance. I don't believe it is. We've had strong growth sequentially. I've never seen a 5% growth in credit and deposits in all my years. I don't believe it's a weak quarter at all. If you're referring to NIMs fall, I think it's an expected outcome. We had guided for it to be so. The year will be two halves. The first half will see some compression. I'm happy that in the first quarter, the fall is something that's precipitated, and we believe the pickup will be from here quite meaningful. So I'm not sure where the weakness came.
Well, it came versus the estimates that were given by the analysts, Mr. Srinivasan, and that's how we called it a miss versus the estimates.
Yeah, so that's where I'm making a point to disagree with that. But that said, I do believe growth has been consistent, and slippage also, I heard you say, is not out of pattern, because this is the quarter that, normally our slippage is about 450 crores or so a quarter. This quarter saw another about 490 or so. But that is for the quarter 2 years after the restructured book post-COVID. Whatever was the moratorium was over, so you did anticipate a slightly higher slippage in Q1. And it is very much on guidance. We had said our credit cost will be about 40 basis points. I'm happy that we are exactly there, and that will continue. So in terms of momentum, we've entered the year quite strong, I would say. On NIM, we believe expansion is on the cards because, as you know, we pass on the rate increase on T+1. So maybe in our case, both the increase and the fall thereafter have been 1 quarter ahead of many other banks. Well, I'm not commenting on others. I do believe ours has been quite to script what we had said would be. And I believe from here on, we would see the margin expansion play through because the tail end of the rate increase in deposits is more or less playing out.
But Mr. Srinivasan, I do take your point and I'll follow up on that as well. But what about your fundraising plans?
No, I think we've mentioned in our meetings in the past that in the financial year 24 and maybe the early part of financial 24, we are looking to do a cap raise. But I have to be honest, there's nothing that we have planned out and I can say it's happening tomorrow or day after. But yeah, we are working through that process. We've met many prospective investors who have expressed interest. We've made some guidances. I'm happy that we've delivered on or better than our guidance, and we believe that that should continue. So I think the interest should be there, and we are hopeful that in the course of the weeks, months, we should be in a process to complete the capital raise.
Do you think the capital raise will be in the second half, or you will be able to complete it in the first half, sir? Because you've already had conversations with investors.
Reema, I don't have a date in mind, but yes, we are progressing quite well. That's all I can say.
Any size in mind?
We have a shareholder approval to go up to 4,000 crores. Between a pref and a QIP. We are evaluating options. We have seen considerable interest on both counts. So all I can say is we are, coursing well, and in the course of not very far from now, we should be able to put through a good transaction.
Okay, all right. Mr. Srinivasan, can you give us a sense of what your net interest margin was in Q1 of FY24? You're speaking about margin expansion. What was it right now? What is the number looking like by end of this year?
The quarter where that went by, the NIM was 3.15. We had said for the full year, we expect closer to 330. And that we had also said it will be a year of two halves. The first half will see some compression, and the second half will see more meaningful pickup. I'm happy that our model suggests that maybe from Q2 itself, the pickup will be more visible. So we see a 7-8 basis point improvement in NIMs in the Q2. And then from there, we will see how the mix of the business plays out and business momentum. But yes, we are seeing the pickup visible.
And slippages, sir, will they trend down to levels of about 400, 450 that you had last year? Or will it be closer to 500?
Hopefully mid 400s. But Reema, you must understand the book has grown 20% year on year. So to have no credit, credit slippages higher would be surprising. But that said, our slippage ratio has never been more than 1%, right? Many of the banks have a much higher slippage ratio. Ours has been consistently in the 1 or thereabout, and I don't believe that will change.
It's still amongst the best in the industry, slippage ratio of 1%. So any guidance on loan growth and deposit growth?
When we met after our Q4 results and for the year, we had guided we'll grow in the high teens, 18 to 20. We started well with 20% growth in Q1. At this point in time, I believe that should sustain, unless something changes. Yeah, we are keeping to that commitment. And it's important to point out that the mix of business, retail, wholesale, and all our businesses have grown sequentially 4 to 5%. So it's not a pronounced growth in one area that's sort of dominating the outcome. And that's an encouraging. It's broad-based. Every business has grown between 4 to 5%, whether it's corporate banking, commercial banking, business banking, retail, many of our products. Of course, some new products are growing at much higher rate because of a base effect. But generally, our growth has been quite even-paced across all our businesses.
Okay, Mr. Srinivasan, that was going to be my next question. What has been the growth like in different segments? So let me go across to the next one. Any plans of listing your subsidiary? What is the plan there?
You love such questions, don't you? FedFina is actively in the process. They had a shareholder approval and a process that they had filed. Last year being a little more softer, they chose to hold back. I think they're reconsidering a filing proposition and a capital raise. Like I mentioned on our prospective QIP or pref, they're also very actively looking at something. Company has done well last year and this quarter. So I do believe in the course of not very far from now, they will be back in the market.
So any signs of stress building in the retail book?
Remember, our book is largely a secured book, right? Because we don't have much of an unsecured portfolio. So my commentary is on the restructured part of the secured book. We did see pickup largely because the restructured 2-year window was getting over March 23. So a large part of that. So we did see a slightly elevated slippage in this quarter. Now that is over, that hump is crossed. Now the repayments, the demand has already been made, and if they're paying, it's in the run rate. If they're not paying, then it turns out an NPA. I don't see much build-up on that count. I think the SME business has done remarkably well, partly aided also by GECL, and they've stabilized. So I'm not calling out for any significant risk on the retail portfolio at this point in time. On the book, we have. Unsecured, I can't quite comment.
Okay. All right, Mr. Srinivasan. Always a pleasure speaking with you. Thank you so much for joining us and patiently answering those questions. That's Federal Bank and the outlook going forward as well. With that, we'll slip into a short break. And when we come back, we'll get you more on markets and stock-specific action on the other side. Stay tuned.